Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be talking about AMC and the wild price action. So let's get right to it. All right, so AMC Entertainment is up 95% for the day. If you look at their after hours, they're up over another 8.71%. So you add that all together, you got yourself up over near 104% just on the day. If we look back on this stock on about a 6-month time frame, you can see that you just see this insane increase. This is probably a gamma squeeze happening on the shorts. If you can see back here in January, the shares were trading a little, actually traded sub $2. If you were in, 6 months ago at 363, you'd be up 1,600%. It's just insane returns over that time period. And if you just want to look at the price compared to its historical value, let's go ahead and look at that. So if we bring that out to the max all the way back to 2014, you'd have a 217% increase. It's a pretty, not a very good percentage gain if you compare it to having to hold it for 7 years. But if you look at back here, the highest point it's ever been is it closed out was at $35.30. So, it's getting pretty close to actually intraday. It traded over 72 cents a share. So at that price, it would have been trading for double what it had at its highest in 2017, what it traded for back then, which is absolutely crazy to think that AMC is trading for more than what it was worth back then. If you look back in 2017, its shares outstanding were around 100. They issued some more shares, went to 130. If you go back to that, once they issued those shares, you saw that the price went down and it continued to decline ever since. If we go back to the shares outstanding, you can see that in the pandemic, they started around 104, then they went to 109, and then you saw these steep cliffs where they started to buy and issue tons of more new shares. So starting at about 100 and going all the way up to 500 million now. 400% increase in shares outstanding. That's massive dilution. For those who don't understand what shares outstanding is, it's basically meaning you're getting less of a stake in the company. So if there's 100 owners and then they decide to issue 100 more shares, well, the shares that you owned became half as valuable as they were before. So again, in this case, by them issuing 400% more shares, they've been kind of diluted, and so those existing shareholders, what they have a stake in the company is worth less. Therefore, you should technically pay less for the company. Now, what we've seen contrarian to that idea is that the stock price just continues to go up, and almost we're going to the moon here, guys. But I still have to briefly, since got to look at the fundamentals, we got to see why and what revenues would justify that kind of increase. So if we look back in 2017, we can see their revenue. This is when they're at their all-time high previously by half, and they were making $33 million top line. Going down to net income, they brought in negative $3 million net income. Now, that wasn't normal. Most of the years they were bringing in negative. Back, if we go all the way back to the 2014, which has been reported, which I did the share price, they're making 397, 675, 776, 657. And again, these are not great numbers. And even in 2019, where there was no pandemic, they even lost money there on their net income side. Another thing I want to point out is just the cash flows from operations. So again, in 2017, they made 3.4, almost 3.5 million in cash from operations, and this is basically this their free cash flow is cash from operations minus their capital expenditures. So that's things you can do to pay down debt, issue more shares, and yeah. Anyways, point is that they have negative free cash flow in 2017, and that's when they had their highest share count, or actually highest. I'm lost for words here, but basically they had their highest share price. Yeah, that's what I'm trying to say. And then again, you see all this going negative again in 2018 and positive back in 2019. And again, if we go back to their share price in 2019, you can see that again, it was continuing just to decline even after they broke positive cash flows there. So again, last year, again, to be fair, every industry suffered in the pandemic. Movies definitely being one of the worst hit. Huge top line hit to revenue and huge hit to their capital expenditures were lowered, but they still had a huge loss from operations. So not good to see there. Even if we saw, let's say, free cash flow, I think just to do a multiple here, but even if we saw this 4 million minus their capex, let's just do that math real quick. We could do a quick multiple. Throw this calculator up on the screen. 4032. It's 4.032 million minus 3690. And then we just give it a high multiple of 20 times free cash flow, and that would give you optimistic a 6.8 billion or 6.8 billion dollar valuation. If we now, that kind of brings me over to market cap. So let's look at their market cap over the years. If we look at their market cap back in let's say end of 2019. Their market cap was around, a sixth of that, a seventh of that at 0.7. So three quarters of $1 billion was their market cap. Back in 2017, when their share price was trading at their all-time high, they were trading at about $4.1 billion. Was their market cap. Market cap is essentially shares outstanding times the current share price. That's your market cap. That's what people believe the company is worth today, based upon the cash flows, the fundamentals, the future potential, growth, etc. So if we look at what has happened in here recently, back in January, you saw that they were trading for about $2 a share. So that gave them about a $500 million valuation, which isn't far off from the 2019 numbers, to be fair. And then that went all the way up to $4.5 billion when the shares went up to $19 a share, which was exceeded the 2017 highs. And again, there was another squeeze and it went up to $7 billion. There was a slight contraction, and now it's all the way back up to $60, over $60 a share, $68 a share right now, and it's at $28.17 billion. Now, that is absolutely crazy. It's wild. This is an insane valuation, even looking historically. In summary, AMC's shares are going absolutely crazy. I'm not going in on puts. I'm not shorting this stock. I'm not spreading FUD. That's not what's happening here. I'm just showing the numbers and saying, look at the historical values. Look at what I've calculated on valuation, and ask yourself and show a valuation of what you think AMC is worth. Share with me. I'll be happy to look at it. But at this current price, I would not recommend anyone even purchasing for growth or going in on puts or shorting the stock. The market's acted too irrationally. We've seen that with other names like definitely GME as well. So just, I would just say watch the show. It's definitely entertaining, that's for sure. AMC Entertainment, you've been entertaining, at least from a share perspective. No one's actually going to the movies right now, but the show is impressive. So thanks so much for watching today. Frank Finance, out.